All right, guys. We're here. We got CPI inflation data coming out today. Starting the stream a little bit early, but it's a big day. Honestly, Nvidia's back up, though. Nvidia's back up to 111s, which is good. It kind of needs it. Here is the current correction that the market has faced. You can see the SPY here on the right side. That is the current correction. We did have jolts come in a little bit better than expected yesterday, and honestly, the market was flat. I told you guys we probably would get that as well. So, yeah, we got flat market action. Gold is down to 2900s again. Again, Nvidia back up to 111s. Not a shock, not a shock. Yeah, we'll see what we get. What's up, Faye, Ball, Star, Lucas, Ray, ER, Mac, Mark, Ryan, Robert, Mr. Soph, Blaze. What's up, guys? Good morning. All right, guys. We're here today. Let's see if there's any big news coming out. I don't think there is. CPI inflation. Mortgage rates just dropped. So 30-year mortgage rates showed up at 6.67%. This is actually a decrease, so mortgage rates have been going down some. Is my heater broken? No. My wife just kind of freezes the house out in the middle of the night. So it's not broken. My wife just likes it really cold at night for some reason. And if you've ever been married, you kind of know that's how it goes, Men are pretty resilient, Women are too. I'm not saying they're not, but I would say in general, men are the more compromising ones, Like I said, at least most of the time. And so, yeah, it's cold at my house. I'm cold when I wake up. Yeah, no, that's what she says. She's like, oh, I sleep better when it's cold. And I was like, yeah, I guess. The problem is you got to wake up and it's Antarctica in your house. But that's okay. I'm used to it. Would the market react good or bad to that? To what? Yeah, we started off a little bit early today. That's all right. But yeah, mortgage rates coming out low. Look at that. They came in at 6.67%. Still bumping down some. That's good for everybody, to be honest. Mortgage rates coming through right around springtime, too. So, oh, that's good. Bruh, freaking clear, dude. Bruh, clear, bro. They hit me with, how much is this they tried to hit me with, dude? $437, bro. Ugh, dude. I don't ever even go to the freaking airport, man. The last time I was there, they hit me with it. They talked me into it. I just got by Clear. Oh, well. $500 Clear? Come on now. Oh, that's honestly absolutely true, Stephen. The best advice I've ever heard after 25 years of marriage is, quote, would you rather be happy or correct? Here's what it really is. Most men are natural, like men want to solve problems. In marriage. And so, but women are more empathetic. And so they just want you to listen half the time. And that's where the disconnect is. Like, somebody comes to me and they're like, hey, A, B, and C is bothering me. I'm like, well, listen, this is what you need to do. You need to like bump A out of your life. You need to correct B and tell them never to do it again. And you need to build boundaries around C. If you don't do that, then you're not going to be happy, and you're just going to keep experiencing this unhappiness, you know. But they don't want to hear any of that. They just want you to say, hey, I get it. I understand, you know. That's life, you know. In general, right? This is in general. Everybody's different. Like there's some relationships where it's the opposite, where men want to hear that, and where, you know, the women are problem solvers. So it varies, but yeah, in general, mine is definitely the first way. All right, guys. Google up a lot today. Tesla all the way back up to 240s. Look at Tesla here. For core CPI, which leaves out food and energy, forecasts also point to a 0.3% monthly rise annually. Core inflation expected to ease to 3.1% from 3.3% in January. I show 3%. Depends on the analyst, though. 0.3%. I'm showing 3.1, 3.2% on the year for core. On the month over month for core, I'm showing 0.3%. I'm showing 0.3% for both, and then 2.9% for regular CPI year over year, and then core CPI year over year is expected at 3.1 to 3.2% is what I'm showing. That's what I got here. But again, look at this correction here. So we are in like even if we look at the S&P 500, which typically moves a little bit less than the NASDAQ, we're coming from 613s. And we're dropping all the way to 550 basically. Yeah, so we're down almost 11% in the SPY. Even if we go back to the actual like highs here, which, you know, six 13s, yeah. So the SPY is down over 10%, almost 11%. The NASDAQ is down more than this, of course. So from 541 down to 465s, which on a percentage basis is almost 15%. So the correction is here. Whether we continue that correction, today's a monumental day regarding this correction. Will the market continue this? The big question is, what does inflation data show up as? Heading into next week's FOMC meeting is the big thing, right? Like next week we got that big FOMC meeting. It's not a new hat, bro. Honestly, like, to be honest. So I have a hat drawer, to be honest. Like, I've got so many hats laying around. My wife freaking hates it, you know. But that's all right. She'll be all right. Oh, I know, V. Listen. And listen. I'm definitely one of the top 3 most emotionally supportive persons in the world right now, you know. I'm a good listener, kind of. I might try to solve the problem, you know, here and there, but I usually listen. There's a reason Carol and I have been with each other for 14 years now, you know. That's how it goes. Stagflation, when the economy slows down but prices stay high, presents a tough challenge. If this happens, the Fed Reserve would have fewer options to manage this situation. Well, that's usually a precursor to a recession as well, is stagflation, which is basically high inflation and weak economy. But yes, it's basically where the economy slows after after the economy heats up. Typically, the Fed turns hawkish and restrictive and tries to push it down. When the lag, like, and there's a little bit of lag in between when the Fed enacts like rate hikes, QT, and when the economy actually starts to slow. But when the economy starts to slow a little bit, you still are left with somewhat high inflation that we've seen during the hot economy, with slow economy. You know, so like you get high inflation in a slow economy. It's called stagflation. A lot of the time it's a precursor to a recession. And I'm not saying this is that case, but yeah. When do you think, Robert, they're going to do an emergency rate cut? I just don't think that's going to happen, brother. I might be wrong. Maybe I'm wrong. Maybe I'm optimistic, too optimistic. I just don't think they're going to cut rates in an emergency cut. An emergency cut is like, hey, we know we don't have a Fed meeting today, but things are so bad right now. We're going to do an emergency meeting with the Fed members and choose to do an emergency cut out of left field. You know, I doubt they'll do that. I think it's more so going to look like, and we'd have to get a lot of weakness, a lot of bad signs, a lot of turmoil to get that emergency cut. It's much more likely that instead of doing an emergency cut, that they're just going to decide to cut earlier than expected, but it's not going to be necessarily an emergency one, if that makes sense, right? Does that make sense? So like, they're not going to meet outside. We would have to get brutal economic conditions for them to even have that meeting, and then whether they decide to do a cut after that meeting is a different thing, you know. And yeah, an emergency cut would probably crash the market more than anything, because it's a huge red flag on everything, and so I just don't think they're gonna do that. It's gonna make it worse, not better, you know. It's 8:30 Eastern Standard Time. Let me put the timer up. Honestly, it's weird. My timer's almost exactly right. Look at this. There we go. All right. What's up? What's up, B? How you doing, man? As long as inflation sticks around and jobs stay strong, they won't cut. Yeah, for sure. Yeah, one of the things I tell Carol, if we're in that situation, is to tell me ahead of the time, because I'm not the best at realizing when she wants me to listen and when she wants my input. And so usually I'm like, hey, if you want me to listen, just tell me that. Just say, hey, listen to me for a second, and I'll sit there and listen, you know. Yeah, and I read something about and I don't know, sometimes it's too stereotypical, but if I talk about my problems, I get stressed. I don't want to talk about my problems, but I think with some people, especially some women, then if they talk about their problems, it's like a stress reliever versus, if I talk about problems, I get stressed. So I just don't feel like talking about any of them. I'd rather just solve them and not worry about them. But everybody's different in that regard, I think. February CPI will serve as the latest test of whether inflation resurgence is a risk to the economy. Yeah, for sure. I mean, CPI inflation's big. On the heels of a weak market, more recession fears than I would say typical. The big question is, are we headed towards a recession, and is the Fed going to cut rates? If we get a high inflation report today, it's going to be pretty bad, I think, and I think the market is going to react negatively. If we get a low inflation report, I think that's good and that's optimistic, and that means that we're going to have a more clear path towards lower interest rates, which can ultimately save the economy a little bit more. And so if we get low inflation, that opens the door for earlier rate cuts, which is really what we want. Like, we want earlier rate cuts. The market wants earlier rate cuts. Interest rates are already going down, and if you look at bond yields have been spiking over the last few days, although they are down pretty significantly, with the market turmoil, because a lot of you got to think about, the reason there's this type of correlation, like here's the Q and here's bond yields, is because the reason this is happening is because of economic weakness, right? Like, the market is falling because of tariff fears, right? And the inflation that we get from it. So, like, basically, if other countries put tariffs on our goods, then we might see inflation from it. But also, it obviously means slower economy because of all this stuff floating around and uncertainty in the economy. And so, even though the market is reacting negatively, in this instance, the economy and the market kind of have a positive correlation. Like, they're kind of moving parallel with each other, and bond yields and interest rates tend to follow that. So if the economy's weak, they typically want lower interest rates, which is what you see here. Because lower interest rates will help stimulate the economy, if that makes sense, right? So there's kind of a positive correlation between the economy, the market, and interest rates right now. And that means bond yields. So bond yields, interest rates, the economy, and the market, as of now, are all following each other. The economy's weak, so the market's going down, so bond yields are going down, so interest rates are going down, right? So those are all four following each other right now. And so it's an interesting dynamic for sure. Oh yeah, let me do a poll here. My bad, guys. We got to do CPI. The CPI coming higher or lower than the 3% year over year expected. Higher, lower. Vote on the poll. Let me know how you feel. See, I told you guys that like around CPI, we're going to be hearing stagflation. I told you guys that we're going to be hearing it today. Because, again, if inflation comes in hot, bro, we're never going to hear the end of it. If inflation comes in hot today, people are going to say, we've got a weak economy. We got high inflation. We're headed towards a recession, is what they're going to say. It doesn't mean we are, but it means that's what's in people's mind. That's what they're fearing is stagflation, which ultimately leads to a recession. Yes, the CPI matters to the stock market. Interest rates don't really have a ticker, Abdul. It's more so bond yields and interest rates follow each other. And so if bond yields are down, I don't even have to look at interest rates. I know that we have a lower interest rate sentiment with bond yields decreasing. So as bond yields drop, we got a lower interest rate sentiment, is what it is. All right, guys. So, some key developments today. S&P currently at about 550s. Dow Jones at 414s. NASDAQ at 471s. President enforcement of 25% tariffs on steel and aluminum imports has led to market volatility. European Commission's retaliatory tariffs have heightened concerns about potential inflation and recession risks. Investors are keenly awaiting the CPI report for February, scheduled to release at 8:30. Economists anticipate a 3% rise, slightly down from January's. They're right around January's 3%. This data is crucial. Bond yields have dipped ahead of CPI. 10-year Treasury yield is near 6-month lows, reflecting investor caution amid economic uncertainty. SIBO VIX has fallen about 3% to 26, indicating a slight reduction in market anxiety. And if we look at the VIX here, it's down to about 26, which is good. Steel producers like Nucor and U.S. Steel with aluminum companies such as Alcoa have seen stock gains in response to tariffs because obviously steel is going to be more expensive. Intel stock surged 7.8% in pre-market following reports of potential collapse with manufacturing facilities. Goldman Sachs has rebranded the Mag 7 tech stocks as the Maleficent 7 due to their significant role in the recent market correction. Despite this, they project 10% rise in the S&P to 6,200 by year end. We'll see what we get. Oh, 26 is still very high. Like, if you look at the VIX here, you can put a yearly chart up to see what's high and what's not. You know, up here at 30, we were the highest we had been since the yen carry trade, which is right here. The yen carry trade caused massive volatility, but you can kind of see we're at the most volatile point in markets that we've seen since the beginning of December. Prior to that, since the yen carry trade in late July, early August of last year. So yeah, point is, it's a volatile time in markets. It's a volatile time. Nvidia's up though, that's good. Q is still down but bouncing back a little bit. So we're not seeing super brutal red action today, but if CPI comes in hot, then good, that's for sure. Yeah, and you know, people might be weird, but honestly, I called this crash. I called this correction. I told people in December I wasn't buying up anything. And so hopefully some of you guys listen. I really don't like telling people what to do, but if you've listened to the stream at all for the last 6 months, I've been telling people the market was going to correct. I didn't say the market was going to correct. I said I think the market's going to correct sometime soon, and I'm not buying up anything. And again, I always gave the same statistic, the same metric, which is NASDAQ is up 105% in 2 years. That's too much. It needs to correct, and we are seeing that correction now. And so you love to see it. Yeah, I don't want to argue about politics, though, guys. His policies haven't impacted CPI yet, so that feels good. Yeah, I mean, look, he's only been president for a few months now. Whether he did this is the tariff talk is what did this, and so he definitely is the reason for this correction. Now, whether it is a long-term good thing for the market, like, we'll have to wait and see. I'm not sure yet. Yeah. Yeah, no, honestly, it's not even that. Like, a correction was needed. Markets don't go straight up, and when people get really manic, like, and they think the market's just going to go higher and higher and higher, typically I over the weight of a correction prediction gets higher, you know, gets more. So we got about an hour left, a little bit over an hour before CPI inflation data comes out. If you listened, Musk and Trump hinted the market economy will go through bumps before things will get better. Yeah, I mean, tariffs, they're okay. Again, and I'm very neutral politically, so I'm not really going to go deep into either side, but tariffs can be good long term. And you might ask, okay, well, how are these tariffs good for us long term? The point of these is to rebuild U.S. manufacturing. And so if you want a stronger manufacturing sector here in the United States, that's what these tariffs are trying to do. I'm not saying I agree with them, but that's what these tariffs are trying to do, is they're trying to rebuild U.S. manufacturing. They're trying to push people to buy more U.S. goods. They're trying to have a better import-export balance for us here in the U.S. than we've seen over the past decade, which, you know, at this point in time, we're importing so much more than we're exporting. And that's what these tariffs are trying to change. Again, I'm not saying I agree with them. I'm certainly not. I'm not saying I agree with them, but that's what these tariffs are trying to do. Is they're trying to rebuild U.S. manufacturing, which some people are going to argue that that's the most important sector to rebuild here in the U.S. Other people are going to say manufacturing is outdated and we need to build our information and technology sectors up more, defense, whatever. Again, it's all subjective, but that's what they're supposed to do. Now, there's going to be a lag versus like the negative effects on markets that we get from these tariffs towards, especially when they're actually going to do anything net positive. But that's the point of them, I guess, you know. And again, I'm not saying I agree with them. It's not that we can't talk about politics. Like, I'll talk about what the president does, what his decisions are, how they impact the market and the economy. I will absolutely talk about that. When I say we're not talking about politics, what I usually mean is we're not going to argue over left, right, good, bad, you know, like all this stuff, because that's toxic. It gets toxic real quick, and that's just not what I'm for. And other people might like to do that, and that's fine. We got to keep it neutral here, just because there's no point in arguing about it. It's so subjective, and people take it such to heart, their side of the political spectrum, that if you disagree with that, they think you're attacking them. Like, they think you're attacking who they are, and like they get so emotional about it. And so because of that, we're not going to talk about it. Like, we could talk about what the impacts of the market are to these different decisions. That's absolutely fine, but we're not going to argue being like, bro, this guy's better, you know. It just doesn't make sense. I don't know. I'm going to have to think about expectation for CPI. I've gotten like 8 out of the last 9 CPI reports exactly right. I don't think tariffs have time to increase inflation this month, April CPI, though. Yeah, no, I agree. I mean, they might, though. They might. The tariffs, you know, you got to think when the trade war really started. Let's see. I mean, no. So, yeah, you're right. So, these tariffs are for February. The CPI reports for February. The tariffs, most of the tariffs weren't enacted until early March. And so they're not really going to have an impact on inflation yet. That might come in next month's CPI report, which exactly what, yeah, that's right. Yeah, it's the golden rule, man. It's divisive regardless of what people say. People want to get wrapped up in it, you know. Again, and my true belief is that once you get to the very top, like the tippity top, they're all the freaking same anyway. Like, I don't care about any of that stuff. Like, I don't want to talk about any of it. Like, I just want to live my life. What are your expectations for CPI? I don't know. I'm going to think about it. Let me think about it. I think, I don't know, man. This is one of those ones which I think is a little bit more polarized, the CPI report. And so usually I can put a little bit of weight on like what I think they want versus where we're at in the economy and stuff like that. But I don't know if that's as clear right now. Like, I would say we're at least going to get a slight rise. I would say 3.1% makes sense. 3.1 to 3.2%. But I also think that it could go under, and we could get I think they're going to have more of an incentive to make it low so that it saves us from this recent market correction. But I would say I think it's going to come in a little bit higher than expected, slightly high. Again, I might be wildly wrong. Do not copy me. This is just a straight up guess. Yeah, I have no idea what it's going to show up as. Higher means higher inflation, which is most likely going to be bearish, yes. So it's most likely higher, most likely high inflation, bearish, yes. All right, we got gold sitting at 29.20. Tesla's still back up though, so Tesla back up to 240. Is it time to buy the dip? I don't know. All right, guys. So again, Nvidia is what you want to watch today too. AMD is getting closer to 100. Bitcoin's still at 83s. All right, guys. So yeah, so CPI inflation data. Let me see what we got. Current dollar index going down. Let me see. Yeah, I mean the dollar index is just making big waves up and down. It is falling. The Dixie is falling quickly though. The Dixie's at 103.50s right now. 103.50s. But the Dixie is also pretty flat over the last 5 years straight. Like people always like raise the alarm for the Dixie, but if we look at a Dixie on a weekly chart, it's pretty flat over a longer term period of time. Like look, that's the Dixie over the last 5 years. So it goes up and down. It goes up and down. I don't think there's cause for an alarm and saying, oh no, the Dixie's crashing. It just means the economy's slowing down a little bit from these tariffs, which is a pretty normal response in the dollar. So. All right, guys. So Dixie is down to 103.50s. All right, so Tesla's still popping up, AMD popping up, the SPY popping up. Google is up today. AVGO and Broadcom back up to almost $200. Netflix is all the way down to 8s. It's really right around 904s. Gold is down. We got CPI inflation data in almost an hour. So let me catch back up on the chat here. All right, let me put this up. So, IONX. Tesla sales are down huge around the world. Yeah, no, they're down big. Again, he's selling things to consumers. Again, people hear me say this and they think I'm like attacking Tesla. I'm really not. Like, I'm just talking about the news. I cover all the market news. You might like the news, not like the news. I'm just trying to cover it, guys. Where's my hat? Wingstop down 50% from previous and has a dividend. Is it really? You don't think that has to do with an over franchise? Like they're over franchising? Yeah, our Discord's completely free, guys. Check it out. Great way to help support the channel. There's the link right there. Check it out. Completely free. Doesn't cost a penny. Yeah, so currently the tariffs around the world, there's a 10% tariffs on all imports from China. 25% tariff on all imports from Canada and Mexico, with a 10% tariff specifically on Canadian energy exports, including oil and natty gas. A 25% tariff on all steel and aluminum imports to the U.S. declared, eliminating previous exemptions. Reciprocal tariffs to match the tariffs that other countries impose on the U.S. So yeah, this trade war is definitely pushing markets down. Here's the Q. We're gonna get ready to trade. I think we traded some yesterday too, so we are gonna be trading today. Don't worry, we are gonna trade some today. The dollar index tracks the 6 biggest FX pairs of Euro, GDP, Euro, Yen. Yeah. The Dixie. How do you think the market reacts to the report? I really don't know. I think we're going to come in slightly high, to be honest. But I really don't know. Do you guys think we go up or down from the CPI report? We did a poll here. 53% think higher than expected. 47% think lower than expected. And again, I'm going to give you the reason this report's important. Like, we got a lot of stuff going on in the economy and markets. Right now, it's big. We got specifically a trade war going on. Trade war, obviously, we're going to have higher inflation problems because the tariffs, like the reason tariffs make inflation worse. And we're not really going to see it reflected here, I think. Not yet, at least. We might. But there's a little bit of a lag. But tariffs make things more expensive for everybody. Because, like, okay, so if we put a 25% tariff on Chinese steel, as an example, that basically means that if we import Chinese... that means that if somebody imports Chinese steel here, they have to pay the U.S. government 25%. So the importer has to pay the 25%, but it eventually is pretty clearly passed on to the consumer. And so by making Chinese steel 25% more expensive to import, eventually we're going to get hit with that 25%. Like, they're going to bump it up to the consumer, and thus we pay more. And now it's meant to kind of discourage people from buying overseas and encourage people to buy here in the U.S., but it's almost always passed on to the consumer. And we're also going to get reciprocal tariffs from those countries as well that hurt our imports to other countries. And so it's a little bit more, it's a risk for sure. And it's not just China that we're doing it on in steel. We're doing it on an array of different things. Mexico, Canada, China. Some of our biggest trade partners we're doing these tariffs on. And so obviously it's going to negatively affect the economy, especially short term. And maybe long term it will have some positive effects. I hope so, at least. But short term is obviously negatively impacting the economy. And I don't think it's going to lower inflation. I think it's just going to, make inflation worse. But yeah. And then let's take a look at some other stuff. Here is the dollar index. It is down. Again, I've been putting up bond yields a lot. Here's bond yields. Again, bond yields getting a big decrease. Yeah, so if a ton of steel costs $1,000, a 25% tariffs now is $1,250 is what it's going to cost. This raises production costs for industries that rely on steel, like construction, auto manufacturers, appliance makers. Businesses are going to increase prices on final products because of all this. And so even if we choose to buy U.S. stuff, it's still going to hurt the margins and make things more expensive for us, if that makes sense. It makes foreign goods more expensive, reducing competition. Domestic producers can raise prices knowing that they have fewer cost alternatives. So like there's going to be inflation that comes from it. So does the market react? The market's going to react to inflation regardless of what the number is. How big the reaction is going to depend on what the number is going to show up as, right? So like today we're expecting 3%, but it's going to depend, it's not just one metric. So year over year CPI inflation today is expected at about 3%, I think. Let me take a look at another source, but I think it's expected around 3%. If it shows up at 3.2, 3.3%, market's probably going down. I'm showing 2.9% on some other sources too, so it really varies. 3%, 2.9%. If we show up at 3.2, 3.1%, I think the market's going to go down. I think we could also show up at 3% today. I think we're going to show up at 3.1, 3.2% today. Or I think we're going to show up, at 3% to 3.1% today. I mean, year over year inflation. But I might be wrong. Don't copy me. That's just a straight up guess. Core CPI is the other one. Core CPI excludes food and energy because food and energy prices are the most volatile. So core CPI, it doesn't include gas, basically, and food, which are the most volatile prices. It's expected at 3.2% year over year for core CPI. Regular CPI, both of them are expected at 0.3% month over month. You made sense. What's happening doesn't make sense. Yeah, if you're selling steel products, tracks, yeah, you're going to be paying more. We'll see, Lex. I would love it to come in at 2.7%, you know. So you think core, yeah. Yeah, I don't know. There's no incentive for U.S. companies to produce here nor hire. Even if they did, we still can't sell to a buyer at a decent market price. Yeah, I feel you. This is central part. This is Eastern Standard Time, which is market time. Yeah, no, I've gotten like 8 out of the last 10 inflation predictions correct. I'm not even claiming to get it right though, because honestly, I see somebody mentioning Trueflation. I'm not using Trueflation. If you look at my predictions, they don't really coincide with what Trueflation had. I've never even really looked at the Trueflation. I'm looking at it now though. His Trueflation is 1.32% or 2.8%. Oh, I see what you're saying. So yeah, you're saying versus a year ago it's at 2.81%. Maybe. Honestly, I hope it does show up at this at 2.81%. John, markets are crazy. If we get some points up, too much inflation, no interest rate cuts. If we go some points down, too much weakness in the economy, I think it's best to stick to the expected. Why is the market up? The market's down. But it's not going to go straight down, right? So something that happens a lot, I see this happen a lot, is the market goes like this, and then it goes like this, and people were like, why is the market up? It's like, well, you know, the market's just rebounding from like big, brutal weakness that we've seen. It's not going to go straight down like this. You know, that's not the way the market moves. The market stair steps much more often. All right, guys. Hey, we got 45 minutes left. Got about 1,000 people here watching already. I appreciate the love. Let's see what kind of numbers we're going to get for this report. I'm curious. We have zero leverage. What do you think, high or low? Well, Trueflation has year-over-year inflation at 2.8%. And then it basically has versus a month ago, 2.1%. Which would mark, you know. Let's see, the month-over-month reading skewed. Yeah, from January 24 to January 2025, CPI inflation rose 3%. Now, remember, the Fed likes to use... Okay, let's do a quick crash course on economics. We got 40 minutes left until CPI inflation data. So let's talk about the relevance of it, what it means for the current economy, all this different stuff. And so the Federal Reserve, their job is to balance the economy. That's what their job is. The Federal Reserve is basically like a big old bank. And their job is to create policies that influence other banks and support other banks, I guess is a better word for it. And so they support all these other regional banks. And that's why you hear all the heads of those regional banks make up the Fed. And that's why you hear like Atlanta Fed President X, you know, he's the head of the Atlanta Fed. Like there's all these different regional banks. And then you got the Federal Reserve, which is kind of like the top, the king bank. And the chairman of that is Jerome Powell. So kind of like the chairman of all of them is Jerome Powell. Him and all the other heads of the regional banks make up the Federal Reserve committee, FOMC committee. And their job is to influence the economy and balance it, really. If the economy is really, really strong, typically we got inflation problems. We could have inflation potential at least. And so their job is to monitor inflation. And if they see signs that inflation's getting worse, they want to what's called cool the economy. They want to push the economy down a little bit through raising interest rates. And the interest rates that they're raising are short-term rates called the federal funds rate, but eventually it trickles into all these different things. It directly influences like adjustable rate loans, adjustable rate mortgages, home equity lines of credit that use these rates as their guideline and the rates that they set for others, right? And it also indirectly influences like mortgages eventually and all this other stuff. Eventually it trickles into auto loans and mortgages, and it affects all the interest rates around the country. But if the economy's really weak, like if we're in a really weak stance where a recession is a genuine risk, and they have all this data, so they know, like, they have a lot of data that we don't have. But if we're heading towards a weak economy, their job is to stimulate it. And the way they stimulate it is by bringing those interest rates down. They'll bring the interest rates down. By doing this, it typically contributes to more spending, because when people have cheaper interest, they tend to get more loans, and that in turn causes them to spend more. And that stimulates the economy because of increased spending. If it's a more dire thing, like if it's a more desperate thing, they can do something called quantitative easing, where they inject liquidity into markets, helping to stimulate it directly in that way. And that helps to keep interest rates down as well for a lot of reasons also. And really QE, which is quantitative easing, is directly creating online bank reserves. It's a form of money printing, and then using those bank reserves to, again, inject liquidity into the market, buying up a bunch of bonds usually. And this stimulates the economy. The consequence of QE, even though it's a more desperate measure, number one, it helps kind of the economy get back on track in a faster way versus just lowering interest rates. But the consequence is more risk to inflation. And so the Federal Reserve has to balance that. If inflation gets out of control, then they raise rates, or they can raise rates, and they can also do what's called quantitative tightening, which is kind of the opposite of QE. They do what's called passive QT, which means that they just kind of let their bond holdings mature and run off, kind of taking liquidity away from that market, helping to push everything down. And honestly, the last time we talked to the Fed, they were still doing quantitative tightening. They were still doing QT. They were still unloading their balance sheet. And that, if you listen to the jargon and like what they say in their reports, they're still unloading their balance sheet still. But with all of this said, in the landscape of what's currently going on, you know, we had the last 5 years have been hit with a lot of different stuff. We had 2020 and the pandemic and everything that happened then. And the Fed stepped in and panicked, and they brought interest rates down to almost zero, and they sent out stimulus checks, and they did quantitative easing, injected liquidity through money printing. And the consequence was that the economy ended up bouncing back, but inflation spiked. And part of the reason inflation spiked was, again, because of supply chain restraints that we got from 2020. Everything was kind of shut down. So inflation got worse. And inflation spiked. If you look at CPI inflation and we try to track it, which is what's coming out today. So this CPI inflation report is what is coming out today. If we take a look at what it's been like over the last 25 years, let me make sure you guys can see this. This is CPI inflation. Now, a lot of people are saying we're going towards a recession. And when I tell them we're not in a recession, they bring up how high prices are and all this stuff. But that's the opposite. Again, a recession risk means like a dovish Fed, a less restrictive, loose Fed. High prices means a restrictive Fed. You know what I mean? So the only time prices in CPI at least have actually gone down is the 2008 recession. And again, you can kind of see the whole period that I just explained, like the whole history of economic policy over the last 5 years, and that we brought interest rates down. We had the pandemic here. It kind of tanked things, and you can see inflation go down because the economy was weak. If we pull up the federal funds graph, which is what the Federal Reserve is doing with interest rates, hold on, and we put these like right next to each other is the way I always try to show it, so that people can kind of get a good look at what actually went down here. So again, let me put this up here. Let me put this up here so you guys can see it. There you go. That's good. Okay, so 2020 happened. The pandemic happened right here. The Fed stepped in. They brought interest rates down to almost zero to try to save us from, the incoming economic weakness of that, which supply chain restraints. People weren't working. People weren't spending. People weren't buying. Everybody was panicking. Fed stepped in, brought interest rates down to almost zero. They also did QE right here, and they injected liquidity, printed money, sent out stimulus checks. And ultimately, they kept rates, and they kept this really loose, dovish market in the economy for a couple years up until 2022. During this period of time, you can see CPI inflation spike because of all this economic stimulus that we had going on. And so you can kind of see that's what's going on right here. All the economic stimulus making inflation get worse. And this is really why, all this right here is really why people are unhappy modern age, is because prices went up so much in this period of time. They're still dealing with it. Prices are 3-4x what they were. And so anyways, you can see inflation spike here. Once inflation starts to spike, the Fed has to, their job is to balance things. And so they say, okay, well, we've kept a loose monetary policy for a while, low interest rates. Now inflation's spiking, we have to push the economy down a little bit. And so they do a bunch of rate hikes for basically a year straight. They raise rates from 2022 to 2023. They raise rates really aggressively, and they bump rates up to over 5% at a certain point. And then, and again, this does start to do some damage to CPI inflation. If you look on the other end of it here, you can see CPI inflation start to decrease here. And then they paused rates, right? So then they paused rates up until late last year. They kept rates basically neutral. They didn't raise them. They didn't pause them. And this is why mortgage rates, or not really mortgages, but this is why interest rates are still high to this day, is because of this big rate hike cycle that the Fed went on. And now the Federal Reserve paused rates for a year. And then late last year, I think it was in September, they started cutting rates again. And so they cut rates 3 times. They did a 50 basis point cut, 25, 25, so a full percentage point, because basis points are just quarters of a percent or decimals of a percent. And now they paused again this last meeting. And what they're expecting to do now is pause. A lot of people want rate cuts, though, because, again, we're still dealing with really high interest rates that we've seen over the last 5 years. But the only way the Fed's going to be willing to lower rates more aggressively down, which is what the market wants, is if inflation is under control. And you can kind of see these high rate environments did combat CPI inflation. We're now at 3% or whatever it is, but we're still kind of in that market where the Federal Reserve recognizes inflation as a risk, and they don't want to just kind of start cutting rates more aggressively than they have, because that might kind of make the problem worse, not better. So that's where we are now. If you know, that's kind of a crash course on the economy and stuff over the last 5 years. And yeah, you know, we'll see what happens today. CPI inflation data under the lens of all that stuff. CPI inflation data, incredibly important report. You want to pay attention to this report. Would interest rates heighten with the tariffs? It depends on if they make inflation spike, and it depends on how weak the economy gets. If the economy gets really weak, the Fed's going to cut rates because that's the way they stimulate it from a weak economy. If the economy gets weak, the Fed has an incentive to bring interest rates down to balance it because they don't want us going into a deep recession or depression. And so keeping interest rates too high for too long is kind of like picking up pennies in front of a train track. Like, you want to do it, but you want to get out the way before anything bad happens. And so, like, you don't want to keep rates too high for too long because that can push us into a deeper recession, depression. All right, let me catch back up. Yeah, and prices go up, right? So like inflation going down, what I mean by inflation going down is not that it's literally going down. Again, I showed you guys this graph, and the only time inflation has literally gone down is when we were in the 2008 economic crisis here. You can kind of see that's the only time inflation's actually gone down. What we want is a slowdown of inflation. So this is 10% per year rise in inflation. We want only 3% rise in inflation per year, but prices are going up. And that's why I'm saying this spike to inflation is what people are still unhappy with. Like this spike right here is what people are unhappy with modern age because, again, prices aren't going to go back down. And people have this misconception that better inflation means lower prices, and it doesn't. Better inflation means more stabilizing in prices, not lower prices. And so that's why it's important. The Fed actually uses a different inflation metric, though. They use PCE inflation, which they say is a little bit more accurate. It's typically a little bit lower than this. But yeah. What about stagflation? So stagflation, again, what it really is like, okay, the Fed steps in and we have high inflation. And so the Fed steps in and cools the economy down through rate hikes, you know, kind of like what we did here. So the Fed steps in and cools the economy down through rate hikes here. And then the economy gets pushed down to where now we have a weak economy, but we're still kind of left with the remnants of inflation problems. So we still have high inflation, but a weak economy. And it's called stagflation, right? It's sometimes a precursor to a recession. Sorry, I got to catch back up with the chat. I might have to skip some questions, so just... Yeah, and if we look at the rate expectations, like you can use something like the CME watch tool to try to gauge what the Fed does here. Yeah, you can look something at you can look at something like this. 97% likelihood of a 97% likelihood of a rate pause, 3% likelihood of a cut. So it's just unlikely that we're going to do anything else. I'm going to put futures up. We're going to get ready to maybe trade a little bit today. I was wondering maybe I should trade a little bit now ahead of this, but I think I'll wait. We got the NASDAQ right here. We'll see what it does. I have to draw some levels on this chart. And then again, next week we got the Fed meeting, guys. So next week we do have the Fed meeting. It's a big meeting. And again, today's CPI inflation report might influence it in one way or another. It's a little bit late to influence it, but still. Very good explanation. Sad thing is the average person will probably never understand that lower inflation doesn't equal lower prices. Yeah. I think it's the way we label it. I think if we labeled it slower inflation is a more accurate term for it, because or description of it, because what it's not lower inflation, it's slower inflation. It means it's rising at a slower pace. It's stabilizing. And so that's where the problem lies. But I also think in terms of like simplicity, sometimes it makes sense to say lower inflation so people can kind of understand the different like reactions to policies and stuff like that. But yeah. John, the yields got me confused the last few days. What do they tell you? They tell me that people have started to fear inflation over the last few days. So bond yields are going to go up when we have more inflation fears. And so like an example of this is the JOLTS report showed a stronger economy than expected. I can explain it pretty easily. What happened is that if we look at the JOLTS report that showed up yesterday, right? The JOLTS report showed what? It showed a stronger labor market than expected. What's the consequence of a stronger labor market? Potentially more inflation. What do yields do when inflation is a fear? Yields go up because they follow interest rates. And if inflation's a worry, the Fed's going to keep rates high to combat inflation. And so more economic growth equals yield spiking. And JOLTS report came out stronger than expected yesterday. And then I think we got something else too, didn't we? But let me see. Yeah, the JOLTS report came out better than expected yesterday. So that made yields spike up a little bit. Some people say lower CPI is better. Others say higher. Who says higher CPI is inflation is better? I don't think higher is better at all. Higher means higher prices. Regardless of what's going on economics-wise, weak economy, strong economy, inflation, all that stuff, high inflation is generally bad, regardless of what's going on. Low inflation is ideal, no matter what. Prices not going up fast is ideal, no matter what. And so, maybe with other economic reports like, payrolls, we can argue whether higher or lower payrolls is good or bad or whatever it is. But yeah, low CPI is always better, in my opinion. Sometimes the market doesn't react, and sometimes it's just a completely different animal. But yeah. What are your predictions for the Dow and CPI? I really don't know, man. I really don't know. And honestly, I'm just straight up guessing here with the CPI report. I'll tell you this way. I think the market needs good inflation data today. All right, guys, so we're going to do our post on x.com. So, again, we're going to do our post on x.com like we always do. Looking at bond yields. Yeah, we got inflation data. CPI is huge. I don't know why it does it. All right, so yeah, we're gonna do our post here ahead of CPI. Again, this is a massive report. If you want to check out our posting, give me a follow on x.com. It's completely free. It doesn't cost a penny. We still got 25 minutes left. We already got 1,500 here. There's the link right there if you want to give me a follow. Help support the channel. Yeah, we got 24 minutes. Higher numbers results in less likelihood of future rate cuts. Just saying. Sure. But in that context, the market definitely wants rate cuts right now. Bonk. No? I mean, I might be wrong. But I think the market wants lower interest rates. And we're kind of seeing lower interest rates too. I hope we get lower CPI. Again, my guess though, for whatever reason, the number that popped in my head today is 3 to 3.1% is what I'm thinking. 3 to 3.1%. So we'll see what it shows. I think it's going to be slightly higher, but I might be wrong. Again, I'm just straight up guessing here, so do not copy me. This is just a straight up guess. It really is. Quit the chat. Market is stay stable, slightly bullish. Yeah, I think the market wants a rate cut right now. Yeah, because we had the 30-year mortgage rate show up low today. So we did have 30-year mortgage rate come out low. Let me find it. CPI is due again at 8:30 Eastern Standard Time, guys. Be ready. We did have mortgage rates show up low. I pasted it earlier. Yeah, I definitely don't think we should do more stimulus. Again, guys, like, okay, we had stimulus in 2020, which was justifiable to a certain extent. I'm not going to say it was fully justifiable, and that's one of the reasons we also had inflation problems. You could see inflation rise, and like the price of Rolexes increased dramatically in 2020, right? Like Rolex price price graph. Like, look at this. Like, I like watches, right? But like, look at this. Like, look at the Rolex prices and their influence. Like, so look, here's 2020 right here. Look at Rolex prices, bro. They doubled after 2020. One of the reasons is because we got a bunch of free money, you know? And so I definitely don't think stimulus is a good idea right now in that way. Checks, at least. I think there's other ways to help people besides just handing out free money, because the real reason people are unhappy is because of inflation. And so it's one of those things that might be good. Like, you might like free money short term, but the negative effects of it long term are going to be drastic and unnecessary. So, yeah. Jim Cramer said yesterday or the day before that the market sell-off shouldn't scare investors. All right, guys. Yeah, I don't know, man. I'm hesitant to that. Respect to you, but how is a strong jobs report equate to higher interest rates? Doesn't Powell always say they're looking at weakness? A stronger jobs report equates to higher interest rates. At least it's not higher interest rates necessarily. It's higher interest rate sentiment, which is slightly different. And it makes you got to think about it like this. The stronger the economy is, what happens to inflation? The more inflation rises. When inflation rises, what does the Federal Reserve do? What do you use to combat higher prices? Can anybody answer it at home? Let's do a... Can anybody answer this at home? What do you do to combat higher prices? What does the Fed do? Wrong. Everybody that said rate cuts, you're wrong. Higher prices means the Fed's going to raise rates or keep rates higher. They're going to have a higher interest rate. They're going to be more hawkish. Why? Because of inflation is a problem. If the economy is weak, they cut rates. Okay? If the economy is strong and inflation's a problem, they raise rates. Okay? Like, look, and you can see this correlation here. I went over this earlier. Here's CPI inflation. All right? Here's CPI inflation. Inflation started to spike right around 2020 and spiked all the way to about 2022. All right? If we put up a Fed funds graph, which is the rates that the Fed is influencing, interest rates. When did the Fed start raising rates? 2022. Right here. Hold on. So when did the Fed start raising rates? 2022. When did inflation really start spiking up? All the way until 2022. Like so higher inflation is going to make the Fed be more hawkish. It's at least going to keep a higher interest rate sentiment. It's not always direct. We cut rates, guys. If the economy, like the disconnect I think a lot of people have is they think high inflation means a weak economy. Okay, and again, maybe in some instances with stagflation after we've had deep inflation problems and the Fed starts to push the economy down and we have a mix of that, that's fine. But in general, you need to separate those two things. Again, a weak economy does not mean high inflation. A high inflation does not mean we have economic weaknesses. It's not the same thing. It's actually the opposite thing. And that's in the Fed's mind. The Fed is going to do what they do to interest rates depending on what those things are. If inflation's a risk, they might raise rates to push spending down. Higher interest rates means what? People stop spending as much. They stop getting loans as much because they have higher interest rates to pay for it. So they spend less, pushes the economy down, combats inflation. If the economy is weak and we have a weak economy and we're pushing towards a recession, what does the Fed need? They need more spending. How do you get more spending? You bring interest rates down. You give everybody cheaper access to loans. And that increases spending, Hope that makes sense. Anyways, okay, if saving short-term 4 months for a used vehicle, is it better to store my cash in a high-yield savings account, 4.5% annual rate, or maybe a FDP with high dividends and announced buybacks? What would you do? I appreciate the donation, brother. I don't know. I'd have to look up the fees behind all of it. I would be careful with the high dividends, but I'd have to look up the fees behind all of it. It's all subjective. But I don't know. I would probably personally stick my money in a treasury bill ETF that'll pay me like 5% for short-term treasury bonds that I can sell whenever I want and liquidate it whenever I want, so I don't have to sit on it. And if I could still lock in the yields for each month that I sit on it. But again, this is not investment advice. I'm not an investment professional, and I'm not liable if you lose. Always make your own assessment. Trade responsibly. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. I'm not an investment professional. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Do not copy me. Again, not an investment professional, guys. I'm not an investment professional. Don't copy me. But yeah, I'd probably stick it in like TBIL ETF or something like that. But that's just me, and everybody's different, and it's very subjective. All right, NASDAQ starting to pop. Bro, I got more disclaimers up than anybody, bro. Yeah. Top 3 most protected trader of all time ever in the world right now. You know, when I sit back and I ponder life, you know, I wonder, how can anybody be as humble as I am? You know, and I figure I'm definitely like one of the most humble people of all time in the world right now. In the end, I have no idea what investment advice is, and I certainly don't give it out. So don't copy me, not an investment professional. Market's starting to push up today, guys. We'll see if CPI inflation data, which drops in less than 15 minutes, saves us from this. Listen, when I ponder the life that I live here, you know, I wonder how I can be so attractive yet so humble at the same time. And, you know, humility is just, I'm born with it, I think. Yeah, like I'm so humble, I think people can't handle it sometimes, you know. They're like, how is that guy so attractive and also so humble simultaneously? All right, guys. Bitcoin, where's Bitcoin at? Bitcoin is down. Nvidia's pushing up. It's one of the reasons the market's popping right now. Bitcoin's still at 83s, right? We're at 83.295. So Bitcoin is moving up a little bit. It's slightly green. You should bundle your humble. Yeah. Maybe I should. So many people are screaming the sky is falling. Bro, people are always screaming the sky is falling though, John. Like, everybody, like, you know how many people have over-predicted market crashes in the last 5 years? Every other week they're telling me the market's going to crash, and I have shamed them endlessly for years. But again, I told people in December, I stopped buying. I don't like the market right now. It's too extended on the upside. I thought the market would correct. And so we were absolutely right about it. And again, I don't know whether this is the correction ending. You know, if we get good inflation data, we might just run today, and that might be the end of this big, massive 15% correction. Or if we get bad inflation data, the Fed comes out much more hawkish and restrictive next week at the Fed meeting. That might be worse. You know, then maybe the correction continues. I think we're in a really vulnerable spot in markets right now as well with the tariffs and everything going on in the economy. I think we're in a really rough spot. And so I'm still not buying up anything. But I also recognize, like, if CPI comes in good, you know, maybe we pump up today. Who knows? We'll see. What do you guys think inflation is going to show up as? I think we're going to have slightly higher than expected inflation, but I might be wildly wrong. And I'm pretty sure I had this same sentiment the last couple reports. So honestly, in terms of probabilities, I think I might, I don't know. I'm going to put it out there. I'm going to guess it right. It's going to come in at, I think we're at 3 or 3.1% is what I think we're going to show. But I might be wrong. I'm just straight up guessing, to be honest. That's just the number that popped in my head today. And so we'll see. You know, somebody mentioned that Trueflation has it at 2.81% year over year. And so maybe that's what we show up as. I don't know. Trueflation is going down. Inflation will be down. Maybe so. Again, I see a lot of people talking about Trueflation being down. And y'all might be right. Again, I'm just straight up guessing. I don't freaking know, man. Anticipating a drop in inflation. Yeah, I could understand. Again, Trueflation does have it at 2.8%, so take that context into it. We also have retail sales next week. We got the FOMC meeting on the 20th or the 19th. Wait. When is the FOMC meeting? I thought it was on... Okay, the next Fed meeting is on the 19th. Yeah, it's not the 20th. I don't know why that thing said the 20th. All right, guys, we got about 2,500 here. We still got about 10 minutes left until this report drops. I hope you're wrong. This time we need some relief. Yeah, I mean, look. I've gotten like 8 out of the last 10 correct. But again, like, I brag about it as a joke most of the time. Mostly sarcasm. But It's just a straight up freaking guess. Like, I don't know if there's any edge, and it's just whatever number pops in my head. Somehow I've gotten 8 out of the last 10 correct. But this time I'm not super, like, confident about this one, you know. And honestly, the Truflation kind of contradicts what I'm saying, too. So, again, there's not really much of an edge in predicting it. I think I've just gotten lucky, and, you know, we'll see what happens. But I wouldn't put any weight on what I say here. In terms of my prediction, because I'm just guessing. Maybe, yeah, I'm just guessing. Yeah, I think the market's kind of in this weird spot where it fears both. I think stagflation, again, if we have high CPI, we're going to hear stagflation constantly. So... Well, low inflation is typically better for everybody, power friend. He said, what's the usual reaction on crypto? Lower inflation is usually good. I would say it usually moves in a macro way, but who knows? It could always... Bitcoin's a different animal sometimes with stuff like this. But Bitcoin's been macro following the market for the most part. Like, market corrected, Bitcoin corrected. And so, yeah. Either way, future reports aren't going to be Jedi mind tricks for market makers. Yeah, I guess so. Yeah, again, it's very possible we get low inflation today and the market rallies. And I think it kind of needs it. And I think if they want the market to kind of get saved from these tariffs, that might be what we get. Lower inflation. And much needed in a lot of people's minds, market rally. No, I don't know how it's going to respond there. Regardless of the outcome, this is another excuse for the market to sell off. Yeah, that's what I'm worried about for sure. I'm worried the market's going to sell off now based around this report because, you know, this report is huge. All right, guys, be ready. Do you guys think we rally or come down here, guys? We got about 6 minutes left. We got about 3,000 people here. Do we rally today or does the market turn? What do you guys think? Do we rally today or does the market turn, chat? Let me know. Let's see about Tesla, man. Tesla down huge leading into this report. Tesla down 50%. 50%. We got Nvidia up here. I'm going to put Bitcoin and gold up on the right sides. All right, guys. We got over 5 minutes left. I think we're still going down, but I want to see it go down. No, I don't think tariffs are kicked in yet, Nad, but who knows? Bear's going to be bearing. I don't know, man. I wouldn't put too much weight on the market coming down. I really wouldn't. You know, I see people being like, oh, it's going to be the end of the world. I don't know, man. I think regardless of what we get, I'm at least hoping the market doesn't go down. Who knows, though? It's if we get a high inflation print, market might go down. But I don't necessarily think that's a given either. I mean, I know my prediction was like 3 to 3.1%, but that's mostly flat even. And like, I don't know. We'll see. All right, guys, we got 4 minutes left. 4 minutes. SOM rule activation possible. The SOM rule basically is talking about spikes to unemployment. I think it's 0.5% spikes to unemployment triggers the SOM rule within, I think it's within a given 6 month period. Is it 6 months or a year for the SOM rule? I have to go back and look, but yeah, here we go. Hey, we got 4 minutes left, chat. 4 minutes. Hit the live button next to the play button. Be ready here. All right, guys. 3.5 minutes. Again, we're going to be trading on a Top Step funded account program today. They give you a demo, test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for. Zero commission on Top Step X. They paid out almost $200 million. Great way to learn day trading. The base one's $49. They're an affiliate of mine. I'm biased because I get paid by them. But if you want to check it out, there's the link in chat right there. Understand CFTC 4.41. Yeah, I watch the UFC. We'll talk about it after inflation comes out. We got 3 minutes left, chat. 3 minutes. My theory is that the market wants easy money. Market wants stimulus or anything that boosts credit. Anything else is bearish. I think the market fears a recession a little bit higher than we have of the past year right now because of all the looming tariff news. But I think it could go either way, to be honest here. I really think it could go either way. All right, guys, 3 minutes. 3 minutes. Yep, definitely biased. Top 3 most biased, some would say. What's your predictions? Give me your number in chat right now. Give me your number in chat right now. What's your number here, guys? We got 2.5 minutes left. 2.5 minutes left. $3.5. Nah, it's not going to be that much. I see 3.1, 2.5, 3.2, 2.7, 2.9, 3, 2.8, 2.9, 2.8. I see a lot of people mirroring the Trueflation report. 2.9, 2.8. Yeah, my prediction, I don't know. Again, I'm less confident. I wouldn't hold any weight to my prediction today. I really wouldn't. My prediction is 3 to 3.1%. But, again, Trueflation has it lower than what they're expecting at 2.8%, 2.81%. So I really don't know. Yeah, I really don't know. And so I wouldn't necessarily mirror me because I'm not super confident in mine today for whatever reason. We got about 4,000 viewers here, guys. Hit that live button. Listen, we cover all these reports every day live right here. We don't sell a course. We don't claim to be good. We tell people we actively suck at trading. We trade live every day. Don't even claim to be a good trader. We really cover economics and markets in general. If you want a one-stop shop where we cover Fed meetings, markets, all that good stuff, subscribe. Tomorrow we have PPI inflation data. I think later on this week we got retail sales. It might be next week, though. Then next week, we got the Fed meeting. We will stream the entire thing live. Be ready, guys. Let's go. Let's do this. We got 1 minute left, chat. 1 minute left. Yeah, hit that like button. We got about 4.3 thousand people watching right now. He doesn't know what I'm talking about. I definitely don't. Top 3 least knowing person about what I'm talking about in the world right now. I'm too cool. I'm definitely the least cool person in here. But the most attractive, for sure. 2.8%. Hey, y'all hit the live button next to the play button. We got 30 seconds left. Hit the live button next to the play button. Some of y'all are delayed on the stream. Hit the live button next to the play button. I don't know. CPI inflation is going to probably have the biggest reaction versus PPI. All right, guys. 15 seconds. The timer's a little bit early, guys. Timer's a little bit early. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And here's the report. CPI inflation showed up at, hold on, wait. Huge green moves at 2.8% versus 2.9% expected. 0.2% month over month. Core CPI showed up at 3.1%. 0.2% month over month. Trueflation was right. 2.8% versus 2.9% expected. 2.8% versus 2.9% expected. Lower than expected. Honestly, the market kind of needed this. The market honestly kind of needed this. 0.2% for core, 0.2% for regular, 2.8% year over year for regular, 3.1% for core. Yeah, this is good. Again, like I said, man, I thought I'd be wrong about this one, and I was. But look at this big, huge surge of momentum here, guys. Wow. Again, the market needed this right now. Yeah, Lex, you were right. Trueflation was right, to be honest. Like, if you look at Trueflation, this little post, or this number right here, was right. 2.8%. So, interesting. Market loves it, of course. And market kind of needed this move. Are you buying up stuff now ahead of the Fed meeting is the big question. Now, I'm going to end this poll. I want people to all answer this question in chat. I want people to all answer this question in chat. With better CPI, are you buying ahead of next week? Are you buying ahead of next week's FOMC meeting? Yes or no? Vote on the poll. With better CPI. Are you buying right now, guys? Let me know what you guys think. Yeah, I was definitely wrong about this one. But, nope. Yes. No. No. Yes. Yes. No. Yes. Are you guys buying right now? Again, we got a big surge. NASDAQ's still under 20K, though, so it's not like we're back like to the heavens or anything right now. We're still pretty low. Tesla spiked all the way up to 244s. Google spiked up. SPY is kind of pulling back a little bit, though. You know, and maybe like fearful of weak economies might make the market less reactive to inflation. I saw some people saying that. Maybe that's true. Look at this big pullback here. I don't want to buy this dip. I'm going to wait, though. Well. Should I buy the dip, guys? Are you buying the dip? Let me see. Again, guys, if you haven't already, check out TopStep. TopStep gives you a demo, and they test your skill with it. If you want to learn to day trade, do not fund your own account. Almost all day traders lose money. I know I lost thousands in the first couple weeks I tried day trading stocks. Most day traders lose. It makes no sense to try to look cool and fund your own account when there's something like TopStep out there. TopStep gives you a 50K demo. They test your skill. It's $49 a month. Very cheap. If you can make 3K in profit on that demo without losing 2K first, following their rules, and it teaches you how to trade because it teaches you how to follow rules. If you can do that, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. That's very similar to funding your own account. If you fail, you're out 49 bucks. Limited risk, similar reward to funding your own account. That just makes sense. Teaches you how to trade under pressure, and they're the most legit one in the world. They paid out almost $200 million. They fund thousands of traders. A great way to learn how to trade. And in the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Most Forex traders should be trading futures. There's less red tape. Patterns are very similar to like stock trading patterns. No PDT rule. It's very similar to day trading stocks. TopStep's the most legit. And if you use my link and you use TopStep X, 0 commission on TopStep X. 0 commission. And so, again, I'll put the link up in chat. They are an affiliate of mine. I am top 3 most biased trader of all time ever in the world right now. Some would say, don't copy me. I'm not an investment professional. I'm not liable if you lose money. Understand all this stuff, guys. Understand CFTC 4.41. Again, 2.8% year-over-year inflation. 2.8% year-over-year. Core CPI showed up at 3.1%. Both of them showed up at 0.2% month-over-month. I'll put this data up on screen right now. But yeah, better than expected inflation print. Better than expected. The market liked it. It's starting to push up. I'm thinking about whether I should buy this dip. I'm going to buy this. There we go. All right, so we just made a little bit, not very much. You can see how similar this is to day trading stocks. So again, we're going to put this up on screen. We showed up at 2.8%. Core CPI showed up at 3.1%. All right, so we got all this data up on screen right now so you can see it here. It looks like me cutting that trade was the right move because look at this turn. There we go. All the data's on the screen right there. Do I buy this dip now, too? It looks like a good little dip, but who freaking knows, man? All right, I did the poll here. 63% say yes, they're buying ahead of the FOMC meeting next week. Core came out lower. Expected 3.2. We showed 3.1%. I might add to this. I like buying it. I think it makes sense, but there we go. Give me it. There we go. Whew. All right, cool. So we ended up making some money there. I thought buying it made sense, and it did. We just kind of scalped it. Yeah, I mean, it's a big move, guys, but like you got to understand something here, though. This certainly, like, we're still in the correction, and it doesn't mean much yet. Like, if we want to see this correction continue, just to put a daily chart up, this is where we're at now, chat, on the SPY. So we're still down brutally. If you look right here, like, this is the correction on the QQQ. Currently, we're at, let's see, 480. So we are right here. Like, let me zoom in. Here's the correction. We are currently right here. And so we still got this whole thing that we've corrected from still, and we're not back up yet. The question is, do we start to rebound back up into this? I don't know. Yeah, so we're still down massively, I guess is the point. I hope the correction's over. I really do. I'm not really one that wants the correction or anything like that, but we'll have to wait and see here, to be honest. Yeah, Tesla back up, though. Tesla back up to almost 250s. Really interesting market, though. I think there's going to be a lot of buys that step in, but I think it's risky here. So, again, we are up a little bit on the day. Let me put my CPI report up. What was last time for CPI inflation? Was it 3.1 or 3%? It was 3% last time. Both core and regular CPI month over month showed 0.2%. Will this cause a bounce back from the recent market correction? Again, looking at our poll number here, 64% say yes. All right, so we bought 2 contracts here, and I'm going to take some off, and we're going to get out the rest right there. Kind of scalping some of this move. Like, you can kind of see some of our trades here. I just think buying after a strong inflation print is typically the best move, but it varies. I'm up about 100 on the day on this account. Yeah, we haven't really followed through after this big run. And again, stick around. We are going to be trading live at the opening bell today. Yeah, what do you guys think? Rumors the dollar's going to the Bitcoin standard. Maybe. Where's Bitcoin? Bitcoin did end up popping up with the rest of the market here, too. So Bitcoin did end up running. So, yeah, look at this, guys. So we're at 19.659, 19.662 right now. So the market is turning a little bit down from the CPI inflation report here, guys. So the market is turning down from this report. Interesting. I'm asking people if they're buying. Most people say yes, they are. We need a blowout report to move higher. Yeah, the Trueflation data was right. I saw a lot of people mirroring the Trueflation data, and that was right. Bond yields spiking. I'm guessing bond yields are going to be going down. No, because better inflation data means more likely, like the Fed can cut rates safely, more safely. Let me see. I would assume that's the case, but yeah, bond yields haven't really moved. They went down originally, and then they started to pop back up some, kind of inversing the market here. Very strange. Lower inflation means we have more of a green light to cut. And so let's see if the rate likelihood has changed here. So here's the rate likelihood. All right, we're at 97-3. 97-3. Still, I don't think we changed this. Let me see. We still haven't changed. I'm wondering if we're gonna see. Let's see May. See May. We're still expecting a pause in May. June, even more likelihood that we're gonna cut by June. So it's still looking like we're gonna pause rates. Looking more likely that we're gonna cut in June though. The likelihood that we're gonna cut in June is now at 55%. This might have a lag. It might take a little while to see this change though. So this might take a little while to see it change. I asked people if they're buying ahead of next week's CPI or at next week's FOMC meeting. 67% say yes. Is the correction over, guys? You know, sometimes we have a lag reaction. We're seeing some tech stocks, Tesla up, Netflix up, AMD up, Bitcoin up, gold up, Broadcom up, Google up, SPY up, Q up. Gold is moving up too. Bitcoin is too. Part of me wants to buy this dip. I know I'm kind of buying at the top of a trend, but I think the market's dropped enough. We got a nice cushion on the day that we can play with here. Let's play with it. Oof. Well, nonsensical, but hey. Let's see if we bounce. I would assume we slow down some, but maybe it's just not enough to stop us from the correction from the tariffs. Kind of flat on the day now, unfortunately. We had built up a cushion and then we took larger risks, but the market just not sensical right now either. It's all good. We're gonna switch this account to a different one now. You don't love to see it. Still green in this one, but you know. So I'm switching to a combine account here, guys, which I am going to be trading a little bit more. Maybe I'll have a little bit more room to trade this one. It's pre-market. I don't want to give too much gains back, so we are up to. We're 3, 4, 6. Take half off. We'll maybe add back here on this pullback. There we go. Trading micros. It'll pump at the open, just wait for the bell. Yeah, I mean, again, this is a combine account. Like, we're down a little bit on the other account, but not much. And so this is a different account. Like, we switched to our pre-market account. How long did it take for you to trust levels? Well, it's not about trust. It's about seeing confirmation, mostly. So, like, you need confirmation in them first. Like, levels are useful because you can wait for them to confirm, basically. And once they confirm, then you can, like, it's not about trust, I guess is the point. All right, so we got about 600, 700 on this trade. We're going to start locking this in. Our thesis was correct here, too. Look at this. All right, we're out. All right. Hey, baby, how you doing? All right, guys. So I'm about $1,200 up in this one. We're halfway there. I'm gonna buy into this pullback though. There we go. We got the bullish action. It just took us a lot more than we wanted. 6 contracts. I'll add to this one. We need about $300 more. I gotta be careful not to make too much. Sorry, Carol's in here. I was talking to her. All right, so now we're pulling back. There we go. All right, so we're up about 1250. We need about 250 left in this one to make 1500. I'm trying to be smart, but I'm starting to not trust this pullback a little bit more, so I'm gonna go ahead and cut this now. And we'll wait. We need to make about $100 left, basically. Our bounce thesis was right. We just were a little early on our first account. Yeah, no, I think this is a pretty small move, honestly. I don't think it's a huge move for lower inflation data, to be honest, which I think it kind of needed. Yeah, nobody really knows, right? Like, it really is something. It really is something that, like you get people in the chat, and this is something that I try to teach people so they understand. Right, like you get people like talking smack about me or my trades, and like when I go on Top Step TV, it's the same thing, right? Like whether it's my trades or like Dolby's trades or anybody's trades. So what you realize very quickly in trading is that the rookiest traders, the ones that are the newest, it's either the newest or like the most struggling traders are the most critical on everybody else, because it's kind of like a misery loves company type of thing. And so if you see people in chat and they're always like, that's a terrible trade, bro, you shouldn't have taken it because of this, and this, right? The variance is so high with trading. It really is. Like, the variance is so high, nobody freaking knows what's going to happen. Nobody knows if it's going to be a good trade or bad trade. And some of the trades that I've done the best on were trades when I originally entered the trade, people wildly criticized. Like, I bought United Airlines in 2020 after the crash we got from 2020, and so many people made fun of me about it. And then when United Airlines went up like 100% in a couple months, crickets. Half of them deleted their comments. Like, they had super critical, mean comments. They deleted them. And so what you realize very quickly is that the rookiest traders are the loudest in terms of criticisms towards other people's trades. And it might be something that they haven't really recognized, but don't let too many critical people in, like, especially chat or anywhere else, discourage you from taking the trades you want to trade. And I can't say whether your trades are good or not. Everybody sees different things, but just know, even it doesn't matter too much if you get criticism in the chat. No, I don't think you're criticizing my trades. You know, you'll know the ones that are. I'm trying to tell people not to get too discouraged by it, because I probably deal with it more than everybody. And again, it's one of those things where you get good trade, good trade, good trade, good trade, bad trade. Oh, you did this wrong, you did this wrong, you did this wrong. Maybe not even bad trade, just losing trade, you know. And so it's human nature, I think. Fear is still real, obviously, from this small punch, which will be flat at the opening bell. Yeah, no, I made a bunch off of the 2020 crash in United Airlines. I made a bunch I bought MGM at like $7 a share. Where's MGM now? Should have held it, to be honest. It's at 31s. I bought Uber at like 25s, 35s, maybe. It's at 72s now. There were just a lot of easy, cheap trades to get in there. Meta at 120. I wish I would have bought Meta at 120. All right, guys. Hopefully you guys are finding something good to get involved with today. And again, if you haven't already, check out TopStep. TopStep gives you a $50,000 demo account. It's $49 a month. And if you were going to pay for a demo account with real-time data outside of them, it might cost the same. But there's some other conditions to this, that if you take that demo account and you make $3,000 in profit without losing $2,000 first, following their rules and conditions, you want to check with them first. They fund you $50K with a 90% split. And then if you take that $50K and you make $30K, you get to keep 90% of that. So you get to keep $27K out of $30K, which is 90%. They keep $1,000 per $10K. Every $10,000, they keep $1,000 for funding you that money, 90%. And they pay out millions. You also get to keep your first $10K in profit. And really what this does is it teaches you how to trade. Most day traders lose. And so most day traders, what happens is like they end up depositing $5,000, $10,000, $30,000, $20,000 trying to get around the PDT rule, and they lose a huge chunk of that. Everybody thinks they're going to be different. Everybody thinks they're going to be some savant in trading. Almost nobody is. But everybody on the internet claims they are, right? All of them are full of crap. This limits your risk, teaches you how to trade. If you lose, you're out $49. It's not the end of the world. You know, they're an affiliate of mine. I'm biased, but I honestly, genuinely think this is good for traders, because I think without this, they're going to fund their own account and lose way more most of the time. And this gives them a cheap way to learn. If they fail, it's not the end of the world. They're out $50. They can then get a free practice account with TopStep anyway. And if they pass it, $50K funded account, 90% split. You can also get a $100K one. There's a $150K option. There's a lot of cool stuff that you can use for it. But again, I'm biased, of course. I get paid by them. This is only my third plug of the day, guys. My third plug of the day. We've been streaming for 3 hours. But if you want to check it out, there's a link. Great way to help support the channel. 11 PE is what? Oh, JPM? Yeah. Banks typically have pretty low PE ratios, though. But again, if you want to check out, there's a link in chat. Market's still bouncing back up, and I guess I'm bullish here. No, it means you keep 90, they keep 10. Pedro. Yeah, Google has a very low PE ratio. I like Google as a company, too. Broadcom's ripping up as well. It's at 198. So Broadcom, very cheap. Broadcom's on a big pullback, too. NVIDIA is what you want to watch, though. NVIDIA is the one that's influencing everything else. Yeah, we still got, what, 35 minutes left until the market opens, guys. 35 minutes. So stick around. We are going to be day trading live at the bell today. AMD pumping up to almost the hundreds as well. I'm going to short this. I know it's kind of risky. We already got a huge cushion here on the day. I'm just going to kind of add to it and see if we can get at least some pullback now. There we go. We got 4 contracts too. So we can, the good thing about TopStep is that you can like trade small with micro contracts. Like slowly like DCA into it. Not really DCA. DCAing is a little bit different, but average into it over time. Make small steady gains. There we go. There we go. And once we get a big enough pullback, we can add more into it here. Give it a little bit more room. There we go. We got a retracement back up. I got a delayed reaction to CPI. Ugh. I'm going to take some off here and lock in like a little bit of size off of this just to size out. There we go. That's better. More manageable now. There we go. Two contracts. There we go. All right, so we're basically there. Here we gotta. I'll try to slowly add to this. I want a little bit more. All right, so we ended up making money on all that stuff. Nvidia's still pumping up. Nvidia's at 114. Get one more little dip here, we'll be okay. Green. Just needed one little retracement, and we're there. Just gonna sit in this. We got a very small position here. I don't think I'm gonna add any more to it either. Yeah, we're gonna have to cut that one too. So it's still very green. Bitcoin at 84.3s. $106, 10,000 worth. That's pretty good, I think. Yeah, Discord's completely free. Yeah, tomorrow, guys, remember, so listen, every CPI report, every single CPI report, we get both CPI, which is consumer inflation, and then tomorrow we get PPI, which is producer inflation. And so we get both consecutively. So today we have CPI, tomorrow we have PPI inflation data. So it's not just one, we get tomorrow's PPI inflation data, and then Friday we get the University of Michigan consumer sentiment, inflation expectations, and consumer sentiment. This is all very important, very relevant. You want to pay attention to all this stuff, and we're going to cover it as well. PCE is different. So PCE I don't think drops for a minute now. We also have a 10-year bond auction. Tomorrow we have PPI. Friday we got consumer sentiment. All of this is relevant. And then next week we have, let me see what we got over the next few weeks. So next week we got the Fed meeting, retail sales, jobless claims, Philly Fed index. Friday, I'm looking at the next week on March 24th, the week of March 24th. Case-Shiller. House prices, durable goods, GDP data. So we get GDP data coming out on March 27th. So we got GDP and PCE not next week, but the week after that. I'm gonna add to some here, take a little risky trade, but we're already up about 1,200 on the day, so took half off already. I just want to see a breakdown here. There we go. I'm basically betting that we're gonna chop for a couple minutes. Yeah, again, I guess I think we're going to chop here, but we got a small little trade going in the books here. If we go deeper down, we'll add to it. I think one of the best ways for like new traders to do risk management is to take a small size. Once you're green, slowly add to your winning trade, not your losing trade. And sometimes it's don't do what I do what I say. Because now we're getting ripped up against, but we're also very green already on the day, so losing trades are inevitable. We're gonna get out of this big green pop that we're seeing right now. You can see we're still very green on the day at the top. We're up 1,200. I usually typically do better after the opening bell too. I thought we would chop. I think I just didn't respect this bottom of the range. So I was correct about the choppiness. We went up and down and up. I just didn't respect that bottom, I think. Tesla up to 245s right now, 245s. All right, I'll move back. We know you're only human now. Well, I'm down a little bit, but I'll be all right. Yeah, sorry, Pawn. I don't even think I pulled up Discord today, brother. My bad, dude. Like, I pay Pawn as like a moderator, but half the time I don't even pull up Discord. I feel bad. AMD and a 1.5 billion senior notes underwriting deal for ZT Systems acquisition. Canada is going to announce 9.8 billion in retaliatory tariffs on the U.S. in response to the steel and aluminum tariffs, according to a Canadian official. This came out at 7:20 this morning. Honestly, y'all give me a follow on X. It's honestly been growing a lot. Like, we've honestly been getting some really, really good, like, growth on X, to be honest. The low self-esteem in the comment section. Why are all these guys bitter? Because misery loves company, man. Like, again, I really don't know how you can really justify. Like, I have a couple people. Like, people get mad at me for mentioning the haters so much. But maybe it's therapeutic for me to talk about, honestly. It's a hard thing to put yourself out there. To, like, be out here publicly, it's difficult. But it's also, like, you got some really strange people that, like, you can tell they're just super insecure and jealous about, like, stuff. And so they'll literally, like, harass the channel constantly. Like, they'll show up, they'll harass it. That's a weird dynamic for anybody, I think, to kind of have to maneuver around. I usually try to combat it with, like, sarcasm. But It's a strange dynamic for anybody to be around. I just assume misery loves company, and people are just kind of miserable, and they just want to drag other people down. You know, I also kind of consider, like, maybe I know these people in real life, and they didn't end up doing anything with their life, and so they're kind of, like, harassing me online anonymously to try to, like, get some power back in their life. I don't know. John the psychologist over here. But yeah. Taylor Swift fans? It's possible for sure. Oh, dude, that's why I don't talk about politics at all, Tony. Is because if it was politics, dude, it would be so much worse. It would be so much worse. Oh, did I not put my X up here? Check out the X page, guys. We've been growing like crazy on there, to be honest. Appreciate all the we got a couple followers today, too. Appreciate it. We're at almost 4,000 on there. Here, I'll put the link up. It's leverage, Chris. Much respect for publicly trading the open. You're doing the hardest thing possible, and you're doing it for free. Thank you, man. Yeah, I try. I try to give everything away for free. I don't claim to be good. Everything I put out there is free. I don't sell anything really. Like I have sponsors that I promote, but I don't like sell a course or a service myself. I don't even claim to be a good trader. I try to give people free data, teach people about economics and what's going on in the markets, and I think that has value. I think a lot of people appreciate it. I try to do it the right way. I really do. Versus like acting like I'm the greatest trader of all time. Definitely top 3. Buy my course. Look how great my trades are. Like, you know, I brag a little bit. Half the time I'm sarcastic, but I try to give people a realistic place to look at it, and so hopefully people appreciate it. I wake up, see my wife's face, then open YouTube and see yours. Hey, you know. Yeah, I think he just bought a Tesla. Yeah, look at my levels, guys. That's what I'm saying. Listen, top 3 greatest levels of all time. Look at this thing. I mean, it's not too hard to predict this one, though, but yeah. I'll take credit for it. Right, exactly, Chuck. If I suck at trading, they see what not to do. 100%. I agree. Yeah, I mean, I'm not really talking about you, Stephen Ford. If I thought you were some big hater, I probably would have banned you already, bro. So, you know, you seem to be ranting over there, but I'm not really sure if you took what I said personally or what. But let me see. Let me check the chat log. Maybe you are like, you know, let me see. You're arguing with that guy K mostly more than everybody. I saw you say at 8 a.m. we haven't bottomed yet, or at 9 a.m. we haven't bottomed yet. Yeah. Yeah, I mean, I'm not really seeing anything. Except for you arguing with that guy K, or whoever it is. Which I just see you guys as, maybe not arguing, but debating. Hey, thank you, AB. I appreciate it, brother. Thank you for the $5 donation. Hey, thank you, Alden. I appreciate it, brother. Thank you, sir. Yeah, no, you're all good, Stefan. You know, I tread lightly. I used to have a guy. His name was spelled P-H-E-N, Stefan. But when I would pronounce Stefan, he would get mad and say, it's Steven, bro, and get really upset. That man has traumatized me forever. Now I'm like, if I see a P-H Steven, or I always say Stefan, but deep down, I wonder if it's really Steven now, you know. I never sold my Tesla calls. I counted as lost. Weren't worth anything. Nothing to salvage. Once Powell talks, I think it'll pump. Maybe. Yeah, I'm certainly not living off of my day trading. Absolutely, I'm not living off my day trading. Steph Curry. Stephen Curry, maybe. Yeah. John's content mortgage is just stock data, though. It's second to none on inflation. Labor data, what it means. John, your candle's awesome. Keep it up. Hey, thank you, man. I appreciate it. All right, market's breaking under this level, too, at 700s. I think I'm just going to wait until the opening bell, though. No, Powell's not speaking. Is this your hobby? No. I mean, it started as a hobby, but now it probably earns... I mean, I'm not going to say how much it earns, but it earns more than hobby money. Is the easiest way to put it. Yeah, CPI inflation data, again, we're going to regurgitate it back, 2.8%. Do you pay taxes? I think some people I've already heard me talk about here. I pay taxes. For last year, I'm paying 6 figures in taxes alone. So we pay taxes. That's why people are like, get a job, bro. I'm sitting there like, dude, I probably pay more taxes than you. Sit down. You know? And I hate taxes. I really do. I genuinely hate taxes. I had to recently restructure as an S corporation because of I was getting hit with that self-employment tax, man. That thing's like 14%. You wonder why they say an S corporation. I'm going to preface this with I am not an accountant or business professional. Don't copy me. I have no idea what I'm talking about. This is probably true. But when you run if you run an LLC, just a regular LLC, you have to pay self-employment tax. You have to pay what your bracket is plus self-employment tax, which is tacking on another like 14%. And so if you let's pull a calculator out here. Let's say you make $500,000 a year, right? And it's your own business. $500,000 a year, but it's your own business. So whatever your bracket is, which I would say is probably a third of this, maybe a little bit less than a third, like I would say 0.27, 0.28%. So not only are you going to pay 0.28%, which equals about 140 grand in taxes, you're also going to pay 14% plus 28%. So you're going to pay 40% in taxes. So if you make $500K, you're going to pay basically 200 grand in taxes. It's obscene amounts of money, ridiculous amounts of money, $200,000 in taxes. And this is if you just have a base LLC. And again, I might be wrong. Don't copy me. This might be wrong. Correct me if I'm wrong, though. This is all in general. I'm rounding in a lot of numbers here. But if you open up an S corporation and say you pay yourself a reasonable salary, it has to be reasonable based on what other people employed at that job are making, right? So let's say you pay yourself a salary of $70,000, right? Now you still have to pay. Say you make $500K, you pay yourself a salary of $70,000. You still have to pay the self-employment tax, I think, on the salary, but you can take the rest in dividends. Basically, you save 14% in your taxes, and 14% is a lot. And so instead of having to pay 42% in taxes, you take away that 14%, and you only have to pay 28. You know, so it saves you tons and tons, chunks of money over time. You still got to pay yourself a salary and do payroll and do all that stuff, but you save a lot of money doing it, to be honest. All right, guys, we're at 19.7 thousand. 19.7 thousand. NVIDIA at 113.60s. Oh, I'm definitely not a tax evader. I pay more taxes than, again, I've had a regular LLC, to be honest. I've paid I overpay taxes because that's what I always taught to do. Like my dad always taught me, like pay your freaking taxes, bro. Don't undercut it. I could probably have maneuvered it way before this to pay much less than I did, but I'd rather just be safe, you know. And I think making good income also gives you like credibility in a lot of ways in W-2s and tax returns or in tax records, because if I ever want to get like a big loan, I can come to them and say, look at how much I make, give me a loan, you know. Versus if I didn't make that much and I tried to maneuver it to where I only made, you know, I don't know. I'd rather overpay. I think today's CPI was lower than expected, but a lot of people expected it because of the Trueflation data. I think that it's only slightly lower than expected, and the drops that we've seen in markets are already... Look at this level hold, guys. Look at this level. The drops that we've seen in markets, we still got a long ways to go on the upside. And we still got a week. We got PPI inflation tomorrow, which might buckle this down or up, depending on whether it comes in hot or low. But yeah, so far so good. The inflation data, I think we needed lower inflation data today. This opens the more green light for rate cuts, because if inflation's under control, the Fed's going to be more willing to cut rates, versus if inflation's super high, the Fed's going to be less willing to cut, if that makes sense. You could take more write-offs, sure. I mean, I could, but, you know, I really don't have any write-offs. I don't have a company vehicle. I don't, you know. I mean, I write off stuff, don't get me wrong, but all of it is genuine, true expenses. I'm not trying to get, like, a company vehicle or a company house or anything like that. Like, I'm good on that. I kind of separate it, to be honest. I'm not a pro trader, philosophical. In fact, I'm one of the top 3 worst traders of all time ever in the world. Yeah, I did too, man. I should have done an S-Corp a long time ago, unfortunately, but I just didn't, you know. Yeah, I like cars. The problem is you can't write off a car, Alden, unless it weighs over a certain amount of pounds, right? So, like, if I want to write off a vehicle, and again, guys, we got 10 minutes. We're going to be day trading the opening bell live. I'm kind of getting into some other business conversations, so, yeah, we're going to day trade live at the open, guys, so stick around, like, we are going to trade live. But in order to write off a company vehicle, it has to weigh over, I think it's like 6,300. Wait, let me see. It has to weigh... Hold on. It has to be qualified as a heavy vehicle. It has to be 6,000 pounds or more, I think. Which is basically just trucks and SUVs. If not, honestly, if we didn't have this weight limit, I would have been bought like a freaking Lamborghini and slapped a beginner trading sticker on that thing or something and called it a company vehicle. I would have been done that if I thought I could safely. Unfortunately, they changed the ruling. Now it has to weigh over 6,000 pounds and be classified as a heavy-duty vehicle to really write it off. So I could get a Lambo SUV, maybe. Let me see. But again, it's just not worth it. It's, you know, I'd rather buy like rental properties or something. Yeah, see, even a Lambo Urus only weighs 5,000 pounds, roughly. Yeah, I thought about a Cybertruck, but nah, I'm alright. Yeah, I'm not giving tax advice. As I said, I'm not a CPA. I have no freaking idea what I'm talking about. Again, I genuinely have no idea what I'm talking about. All I know is that an S-Corp saves me the self-employment tax. But I'm not an investment professional. I'm not a tax professional, especially. I'm definitely not a tax professional. Again, I've been eating the freaking 14% self-employment tax for years and years now. When I should have written that thing off. It's just a lot of paperwork, to be honest. It's a lot of paperwork. I don't have a first edition Charizard. I have a business. Any vehicle used for business can be written off. I might be wrong. I thought that was the rule, to be honest. But then the real question is, how do I justify its use for businesses? Most of my businesses are online. I could slap a big logo on that thing, but AI coming up here. Yeah, I could wrap it in marketing for sure, but yeah. Okay, so the IRS Section 179 deduction. Again, prefacing, not a tax professional. I have no freaking idea what I'm talking about. Pawn just sent me this video, this image. Coming soon? What are they running now? How much do Cybertrucks run? I'm not a Cybertruck hater like some people. This is coming soon. But no, so again, not a tax professional, guys, not a tax professional. But the IRS Section 179 deduction allows businesses to write off the cost of a vehicle that weighs over 6,000 pounds if it's used for business purposes. It must weigh over 6,000 pounds. The gross vehicle weight rating must be over 6K, but less than 14K. Must be used for business at least 50% of the time. Section 179 allows you to write off up to 100% of the vehicle cost in the year you buy it. And then vehicles over 6K can also qualify for 100% bonus depreciation, meaning you can deduct the entire cost immediately. Yeah. All right. CPI data's out, Dari. You're pretty late, brother. So we had daylight savings time, which means that we lost an hour. We jumped forward an hour. Spring forward, fall back. We spring forward, lost an hour of sleep. Yeah, again, I don't know. Writing off a vehicle, like I already got some cool cars and vehicles in my household. Like I don't really need another one is the only thing, and I don't really have the room for it. Like we already have, like we don't have room for another vehicle. My daughter's about to start driving too, and so we're gonna need to even like add even another car, and so yeah, we just don't have the room or need for it, to be honest. I'd rather just make it easy. Sometimes in life, it's better to keep things easy instead of adding more paperwork to things, you know. I'm not going to be specific about what I'm driving. Yeah, no, that's possible, Jonathan, you know. I could write it off as a realtor. The only problem is I almost never do. It's called Top Step, Emmanuel. They're an affiliate of mine. I'm biased, but they're pretty useful if you want to learn to day trade. Most day traders lose, and that's the same regardless of where you go, including here. It's generally a lot cheaper to lose here than it is to deposit 5K and lose that trying to day trade. And if you pass the test, you get a 90% split. 10K first, you get to keep your first 10K and 90% split afterwards. And again, they paid out almost 200 million, so it's just really useful for traders wanting to learn how to day trade. We got 3 minutes left. I'm going to switch this stream. If you want to check it out, here it is. Well, I don't lose an hour of sleep. Again, they're an affiliate of mine. I'm biased in their favor. Confirm everything with them. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Guys, not an investment professional, not liable if you lose. I have no freaking idea what I'm talking about. Sometimes I trade and sometimes I lose off stream. You're not going to see it all. Don't copy me. If I ever get rich, I'm never filing taxes again. I can afford a lawyer. The only real way to do that would be to like constantly get loans. There's a couple ways, but I don't know, man. I you know. I don't know. You don't lose an hour of sleep unless, like, yeah, I mean, not really. Everybody hates spring forward because you lose an hour. You jump forward an hour. So at 2 o'clock, you lose an hour. It's not really of sleep. It's just you lose an hour. Yeah, I mean, I've heard of that, Tony, but dude, there's so much risk in that, bro. Like, there's so much risk. I think I'm good. Like, I don't think I'm gonna want to ever do that. All right, guys, here's the opening bell. We still got over 1,000 people watching, so appreciate you guys joining us for our opening trading. Let's see what we get. I just posted the link, Emmanuel. You might be behind. Hit the live button next to the play button. All right, guys, there's the opening bell. Market is starting to fall down a little bit. Let's watch NVIDIA. There's Bitcoin in the top right. Let's see what we get today. All right, so now we're heading up some here. I'm watching everything now. Netflix pushing up. It's kind of weird. Nvidia's pushing up too, so I'm bullish right now, to be honest. But I'm gonna take a trade here. It's super risky, but that's all right. We'll play with it. Took half off already. Wow, look at this move. All right, we're gonna cut it right there ahead of this resistance level that we got on our chart, and then maybe add some back here on this dip. We had a good inflation print. Gonna slowly scale in down here. 5 contracts max though, and then we're gonna cut it if it turns against us. We're basically right there. There we go. All right, so we're out. We just made 100 and something. I don't ever really trade this close to the open, but NVIDIA's starting to turn here. That's what I worry about right now. We got a little flag pattern here that we do. Also, guys, if you haven't already, check out our Discord. It's completely free. It doesn't cost a penny. Here's the link right there if you want to hang out with us. There's the link. Alright, Emmanuel here, bro. I've already said it multiple times. It's called Top Step. Link is in the description. I'm going to start removing these comments because you're just kind of spamming it over and over and over again. I've said it over and over again. You might be delayed in the stream. Hit the live button, man. Alright, so we are moving up. Again, NVIDIA at 115s. Usually I wait 5 minutes, chef. Usually I wait 5 minutes. But I think today's a little bit different. And the reason today's different is because we had inflation data pop out. And we also dipped afterwards. And so I think, like I said like right here I was bullish. And we ended up going up because, you know, CPI was bullish. So we're kind of getting a delayed reaction to CPI, which gives a little bit more weight and edge towards trading right now. Which is what we did, and that's kind of how we were green since the opening bell. But usually I wait 5 minutes. I'm pretty strict with it. Sometimes I get talked into it, but I wouldn't say it's the majority of the time, to be honest. This level tapped it. We're right there. How long does it take a person with full commitment to become a decent trader? It's subjective. Everybody's different. Look at this bounce right here too. My level worked here as well. Look at that. Yeah, look at NVIDIA breaking highs. Six candles. We're not going to take more than this. Nice. Kind of add to this, but we got 7, 8. Let's start taking some off here. I don't trust it actually. There we go. That's better. Alright, we're going to switch to our actual funded account. We made enough on this one now. Switch to this one. Did the music stop? I guess it did. I appreciate it, Ricky. The music stops. Yeah, 2 years maybe. But it varies. Some people are just going to take longer. Some people might be shorter. I would say at least a year. All right. Better without music, bro. It's gonna be kind of awkward without music. Will Nvidia slow down is the question right now. Yeah, no, I lost a bunch of money in the beginning, and it did help me learn faster for sure. Apple's starting to push up here. Let's put Apple up here. Look at this run. Take 3 contracts here. Take some off towards the top. All right, just scalping that move here. Just made about $30. Very small. Nvidia's still running back up to 117s. Well, Nvidia's just bouncing back. It's just volatile, to be honest. We're finally breaking out of this range we've been in all morning. Look at Apple, though. Apple's at 222s, 221s, I mean. Nvidia's still pushing up, but we're all rejecting this level here. This level's confirmed a bunch of times right here at 775. All right, so you can see Apple right here at the 200 exponential VWAP and previous closing price. Apple's the most heavily weighted market, or the most heavily weighted stock in markets. Do you think Pereira won? No. Pereira lost. He didn't strike almost at all. All he did was leg kick. For whatever reason, he just didn't swing. And, yeah, I would just say Pereira lost. Ankalaev beat him. I wanted Pereira to win, but he didn't do enough to win. Ankalaev beat him, controlled it, won. Ankalaev won 3 rounds. I had Ankalaev winning 3 rounds. 5th round, I have to go back and remember the fight, but I thought he lost. Pereira. I think people really wanted Pereira to win because he's more exciting, but I thought Ankalaev won. All right, so look at this big dip here. We tapped the top of this range, but again, I'm waiting right now. Yeah, so DeepSeeks thrive in ChatGPT's absence, they're saying here. Let's see if I can find this. Celestial AI is growing here. We're starting to get a dip down. Let me see if there's any news to justify it. See more tariff news. Brazil has opened negotiations with the U.S. with Brazil. Talks have been successful in the past. Is negotiating with the U.S. Occidental Petroleum executive says as oil prices slip down below 660 bbl, small shale producers will pull back from activity. U.S. Commerce Secretary Lutnick says U.S. will add copper to tariffs. He says they are seeking to lower the temperature in talks with Canadian officials on Thursday, according to Fox Business. The Canadian Bank of Canada rate decision came in at 2.75% versus 2.75% expected, previous 3%. So this is a 25 basis point dip. So we ended up buying this up, but kind of risky right now here. And we took half off. Let's see if we get a little pop. Alright, so we ended up cutting out of this. So now we're slightly red here. We're down like, yeah, slightly red. That's a big pullback. Looks weak. Yep. Kind of flat on this account. Market's still flushing down. Yeah, look at this weakness showing up. See, we're right at the 200 exponential here, but I don't trust it. We'll take one trade. We're gonna start take some smaller trades. And then if we break underneath this level here, we're going to cut it. But I'm hoping we're going to push higher and hold support at this spot. Kind of flat now. Yeah, I'm going to start cutting that too. Yeah, we're popping back up, but we're at the bottom of the range. Let's see if we move. Nah. There's a lot of volatility showing up right now, so we're going to get out here and just wait. We're down a little bit, but we're really not that much. And we're green on both of our accounts still, but I don't feel like giving too much back to the market, to be honest. It And the reason I'm buying, just to show you, is we're at the bottom of the range. And so if we're following this range, right, here's the bottom. We're right at the bottom, but it looks like I avoided most of the big red action here. Yeah, right now it's super unpredictable. Bank of Canada's Macklem economic data says economic data since our January NPR suggests the Canadian economy ended 24 on a stronger footing than expected. How Canadian businesses and households are reacting to the trade conflict says trade tensions have led households to worry more about their job security and financial health, and they now intend to spend less. So yeah, we built up a cushion. We took a nice little risk, and it didn't end up working out, but we made a bunch in the other one. Trying to see if there's any other news. All right, so we hit the 200 exponential. We literally tapped directly off of that 200 EMA. Let's see if we hold that. All right, so we did pop right at the 200 exponential. Microsoft going down, others going up big time. Yeah, we're kind of split down the middle here, which is weird. Maybe the market's waiting for PPI inflation data tomorrow. We do have PPI inflation tomorrow. So... make sure we don't have anything else going on today. My levels are actually working really well, but honestly, it's hard to predict. Every time we go up, there's some big tariff news. Yeah, I mean, that's kind of how it's been lately. Let me see if there's any big ones that came out specifically today. I think most of the ones that we got covered today were not from today specifically. They were from the last few days. So it's the 25% tariff on steel and aluminum from previous exemptions were effective today. The European Union announced counter tariffs on approximately $28 billion worth of goods in the U.S., including products like bourbon, whiskey, boats, and motorcycles. Canada engaged in negotiations following threats of increased U.S. tariffs, leading to a temporary resolution after Ontario agreed to suspend a planned surcharge on electricity exports to the U.S. President proposed increasing tariffs on Canadian steel and aluminums to 50%. He later retracted it, maintaining the tariff at 25%. So that all happened today. So yeah, I guess there is big news. Is this sad music? I don't know. It's just music. I tried to put it on calm music, not really like... It made me cry? Oh, I'm sorry, bro. Listen, top 3 criers in the world right now. Jazz? I'm not a big crier, though. I really am. I'm not. I don't know what to do here. Part of me wants to buy, but I'm going to wait. 35 share profit, Reddit in 2 days from 2 trades. I'm on fire. Watch out. Hey, good luck, dude. And remember, tomorrow we got PPI inflation data. I don't think we got anything else going on in between now and then. But tomorrow, PPI inflation. Do we have earnings? No. We got Adobe, American Eagle, Tilly's, UiPath earnings this afternoon, but nothing big. Very groovy tunes to cry to. How often do you guys cry, though? I cry like once a year, on average, maybe. Everybody cries. All right. If y'all want to mess with me for crying once a year, y'all can. Everybody cries. I had a conversation. The reason I'm asking, I had a conversation with my son about this, about how often. I'd say as you get older, it happens less for sure. As you get older, it happens less. And like, I've never seen my dad cry, I don't think, ever. You know. Almost every week, this world is nasty. Oh, I'm sorry to hear that, man. I cried yesterday when the NASDAQ crashed. Never. I have something stuck in my eye from time to time. Yeah. Once every 5 years, man. That's a lot. Sorry to hear that, guys. Cry when I watch the news. Should I do a poll? All right, so we are breaking down here. Again, I do want to short this, but I'm worried it's going to rip up in my face. I don't think I've ever cried from a movie ever. I don't think I've ever cried from a movie ever. Carol gets mad I didn't cry when my son was born. I was too nervous, to be honest. I was anxious. Adrenaline was going, you know. Yeah, I'm sure the dog one. Yeah, that's gonna happen. Cried it, yeah. Cry when I look in the mirror. I cry from joy. Yeah. Oh, I've seen Marley and Me. I've seen My Dog Skip too. Whew. Tough movie. Still didn't cry though, but was really sad. The conversations we have here, man, they're interesting. All right, guys. Hey, market's breaking down. Under the 200 exponential. SPY turned. AMD turned. Bitcoin turned. Gold turned. Broadcom turned. NVIDIA pulled back a little bit, but NVIDIA's been pushing up some. And so we're still kind of green on the day. We're basically completely flat from where CPI inflation data showed up as. You know, it's not that I think that I'm hard to, like, I just don't watch movies that are going to make me freaking cry, bro. Like, I'm not going to watch a super sad movie. I don't know. I don't think I ever have an interest in being like, hey, let's watch this hyper sad movie. I'm good on that. I want action, you know. I don't want sadness. I mean, some sadness is fine. You got to build the story and characters. But, like, a dog movie, I'm never watching that, you know. Mag 7 all green. JG Whitworth. Nah, dude. Avengers Endgame, dude. Honestly, I wasn't. Look, I like the Avengers movie. I was never that wrapped up in it. You know. I know I'm like I think I'm just a little too old, to be honest. Like they produced, my ADHD makes it so that I can't watch movies. Like I get bored. There's just too many of them for me to like track all of them and stay invested. There's just too many of them. All right, so we rejected here. We're moving back up over the 200 exponential. Nvidia still looks kind of poised to bounce back. Apple's starting to test those highs up there. Interstellar is good though, but yeah. Where the Red Fern Grows was the first book I ever read. Super sad, but good nonetheless. The Last of Us Part 1 was great. I'm ready. I'm excited for the second one. We're also watching 1923. Again, I'm just sitting here, guys. I don't really have any edge right now trading. I've lost a little bit on the last couple of trades and accounts that I've been trading. So I'm just kind of taking it slow, guys, and just ranting, hanging out with you guys, which I think is necessary. Like, you're going to find people that are like, what are you doing, bro? Why aren't you trading? It's because it's not always a good time for me to trade in terms of my edge, my system, my strategies. And so I'd rather not give more back to the market and sit here talk to you guys about movies and shows and whatever than taking a bunch of boredom trades, losing more money. I'd rather just not. So I hope that makes sense. All right, so, and again, Apple's choppy. Nvidia's up but down on the last 20, 30 minutes. CPI caused the market to go up and then pull back. I just don't know what the big edge is right now. Saving Private Ryan, great movie. All right. Whoa. Is it good? I heard it was good, Evil Roy. I heard it was good. My jiu-jitsu coach was talking to me about that show. Is it good enough? I mean, I'm thinking about it. My hand was over the buy button right here. And I stopped myself from doing it, but I might regret that. Let's see. All right, guys. I think I'm going to go ahead and cut it. Listen, if you want to check out Top Step, great way to help support the channel. There's no PDT in future, so if you want to learn to day trade, funding your own account's just a slippery slope. You'll probably lose tons of money doing so. Instead, try Top Step. It's a funded account program. They give you a demo. They test your skill with a demo account first. You pass the test. They fund you. You fail, you only lose what you pay for it. In this case, the base one is $49. It's not the end of the world if you lose it. If you pass it, you get a $50K funded account, 90% split. It's the best of both worlds, but I'm biased because I get paid by them. Some would say I'm the top 3 most biased trader / affiliate of all time ever in the world right now. If you want to check them out, great way to help support the channel. Great way to learn how to day trade with limited risk. Here's the link. I'll see you guys later. Y'all be good. I love you all. Y'all have a great day. And, yeah, I'll see you guys later. Y'all be good. Stay safe. We'll be back tomorrow. PPI inflation data. Guys, so tomorrow we got PPI inflation data going live. 8:30, same time. We're going to stream it just like we did today. Yeah. Later, guys.